Hi everyone, hope you're all doing well, and today we're going to do a update on Corsair stock and why I have started buying this stock. So I covered this stock 2 months ago, and basically in that video that I made 2 months ago, I was like, I really like the company, but the valuation is just a little high, and hopefully it can come down and I'll start buying some shares in it. And luckily enough, sometimes it never works out like that. But for this one, the valuation has come down, and I'm like, okay, this is a good opportunity to go buy it, and I'll go through why I've started buying some shares in this company. If you do want to know when I'm buying and selling shares in some companies, make sure you join my Patreon. The link is in the description. I always post when I'm buying and selling companies on there, like Corsair. And if you do want to start buying some shares in Corsair, there's a link to a free trade account and some other brokers as well. And you join through there and you also get a free share as well. But today I'll do a little mini update into this one. So if you could smash the like button and we'll get stuck into Corsair stock. So the last time I made it was 2 months ago, and basically this is the video here you can see. I was basically saying I do like the company. There's a couple of red flags which I will mention again today, but I like what's going on. I just need it to come down to a cheaper valuation, and that was 2 months ago. So if we do flick it, by the way, I'm using a lot more screen recordings at the moment. I hope that's okay. It just makes it so much easier for editing rather than getting all of the individual screenshots on, and it takes me like a good 2 hours to do it. Like the whole video process takes like 6 hours to do, like from the research to like putting it together, the editing, the filming. So this just knocks an hour off. So hopefully you don't mind me doing it as like this, kind of like a screen recording. Also, I think it makes it a little bit more entertaining. So let me know if you want the screen recordings to stay. Hopefully you say yeah, because like I say, it saves me an hour, which is absolutely huge. So getting back onto Corsair. So I made this video probably around about here. So the company Corsair, about $32 right now. And yeah, I made it when it was about a $40 stock, and I was like, the valuation was a little too high. I think I said on the video like $25 is where I look to buy it. Now it hasn't got to $25, but it has dropped 23%, and I was like, okay, I don't want to be too picky. This is a big drop since when I made that video 2 months ago, and I was like, okay, now the company's lost 25% of its value. Is this an opportunity to go buy it? And I have started buying it. I'm currently like flat on my position. I've built a nice position already, and if it was to go to maybe $25, then I would definitely look to probably double my position from where it is right now. Currently about a 2.9 billion market cap company, which I think is pretty good. It is profitable at a P of 28, which isn't too bad. The CEO is Andy Paul, who has been the CEO there since 1994. I think it's always really good when you've got a founder-led company, because they've been there since day one, zero revenue, and I think quite often people think this company's actually been around for quite a long time, but actually it's only been around for a short time, but it's actually been for a while. I think that's really important to say. So positive founder-led company. Now, if we just pop over here to the actual growing industry. So the first thing is I like buying into an industry that I know. I know the industry quite well. I once was quite a bit of a heavy gamer myself. Not as much now, because I spend so much time making YouTube videos and spending time on the Patreon and researching stocks. I guess that's kind of what I enjoy doing at the moment. But back around the probably 2010 to 2015 period, I was quite a heavy gamer. I love playing some of those early Call of Duty games. So I know the industry quite well, and I know that the game industry is growing huge. Now, obviously, you've got to imagine the CV has sped up the kind of growth at the moment, but when we do naturally go back down to normal growth, it's still going to be a growing industry, which I like. I know the industry, which is a positive, and I know it's a growing industry. So the gaming, I think it's always nuts when you look at mobile games and you see here 26% growth. It's absolutely insane. But just on the PC games, you can see here, that's still going to grow at 11%, and console games still growing at 11%. It's still a massive growing industry. And I think the other thing that you've got to remember as well is that esports is getting bigger and bigger. We've got a new game cycle is coming up. So sometimes when the console cycle happens, also gaming's cycle booms a little bit as well to keep up with the console cycle. So you've got that kind of coming into effect at the moment as well. And I think in general, like, the Corsair products are absolutely amazing. Like, if we just flick across to if we can just pick up some of the actual products, the actual products are absolutely amazing to use. So like I say, the gaming side of it is growing huge. But I think just from a normal point of view, like if you want the best products, even if you're not a gamer, you get gaming products because they are the best to use. And this is why there's been such a boom recently in the CV situation, is that you've had people that use gaming products and have been gaming a lot more, but people have been working at home a lot more. They want the best products, and a lot of the times these are gaming products, whether it's keyboards, mice, the actual PC components, which we'll talk about in a second. The gaming side of it, Corsair is where you go for them. So you've got gamers that are coming in, you've got people that are working at home more, upcycling what they're using. And for me, editing wise, I love using like gaming mice, gaming keyboards. They're also the faster components as well, so I like that. And even from an editing point of view as well. So you've got them sort of two industries, and as well, gaming's absolutely growing, absolutely huge at the moment. You know, esports. I think that the audience is a lot wider. Like, I think even if you just went to back 10 years ago, like the gaming cycle for like a lot of these products where you're actually spending, you know, so much on like a headset, for example, if we just flick across the headsets, for example, you know, the fair amount of money, you know, we're talking hundreds of pounds for a lot of these headsets, as you can see here. I don't know why we're on the US side, but, you know, hundreds of dollars. And I think that this gaming thing was really focused to probably, you know, 10 to 20 year olds only 10 years ago. Now I see even like 8-year-olds getting into gaming and, you know, buying decent headsets. And I think it's not something that you grow out of a lot more now. You know, I think it's quite common to be in your 20s and still playing games, your 30s and still playing games. Like, it's actually quite cool, you know, to buy a lot of these things. Like, and I think if you only went to like 10 years ago, it's changed a lot. You know, the age range has got a lot wider, I feel. So I think that when you take in the work at home, the gaming growth, the esports growth, the age range where this is applying to now, massive growing industry. So that's the first thing that I like. It's a massive growing industry that they are in. Now, one of the companies I actually used to buy in this sort of industry was actually Turtle Beach. But the problem is that these guys, the valuation has just gone up and up and up since I started buying this one. Whereas Corsair is now coming down, and I'm like, okay, that's, you know, I'm a big fan of Turtle Beach, and I do think they are the better company. But Corsair, now that these guys are on the other way down, I'm like, okay, this is getting better and better. Now, one thing that I do like picking up on is that on the valuation side of it, these guys are now trading at a forward P of 17 on Yahoo Finance, which is extremely cheap. Like, this company is going to be growing at revenue of about 10%. To get a 10% growth company at about 17 PE is really attractive. So that's one really positive right there. Like, the valuation, you know, obviously we've got a PE of 28, but the forward PE is even better as growth increases, which is absolutely huge. Now, if we just flick back across to Corsair and the actual website before we actually dig into the company. Basically, obviously, as you can see, Corsair make a lot of gaming gear, streaming gear, PC components, game PCs, software. They do quite a lot. So you can you can do this for yourself and have a quick flick through the actual products. You can see here some of the products they do. I'm actually thinking myself of actually buying a few of the products at the moment because, you know, with editing videos and everything like that, you do need to keep up on your PC, otherwise it just takes forever for it to render. And yeah, you know, you can see all the products they have here, gaming PCs that are complete, softwares, and yeah, there's a lot on this website, a lot of products that they do actually sell. Now, as well as doing a lot of these, they actually have a lot of separate brands as well. So like Elgato, this is a really popular streaming site, Scuff Gaming, Gamer Sensei. This is something that I think they will really build on. This is basically a platform that you hire someone to help you improve at games. I think that could be a really big growing industry in the next few years. So I like this purchase that they made as well. So yeah, very diverse on the income side of it, and also they've made some really good purchase as well. Now, just going on the review side of it, like these products are actually really loved. Like, if we just had a flick through Amazon, which makes up a decent chunk of actually Corsair's revenue, is if we just flick through the review side of it, you can see like 5-star reviews, 4.5-star reviews. Like, these products are actually really liked, and they've got really high reviews, which is really a really big positive with what's going on here. So yeah, as a product side of it, as a review side of it, the products have really, really good reviews. Now, what we'll do now is we'll actually just dig into some of the financial point of view of Corsair. So for this one, we're going to use Simple Wall Street, and we're just going to dig across to Simple Wall Street here, which is a great platform for reviewing stocks in case you don't actually use this one. Now, if we go on to Simple Wall Street, one thing that really stood out to me is that the valuation side of it. Once again, this isn't often we get growth companies on Simple Wall Street classed as being undervalued, 50% undervalued. Personally, for me, I do think this will be a $60 stock to $70 stock in the next kind of 2 to 3 years. So my valuation actually matches up quite a bit with Simple Wall Street's. And I think if we actually go to like a 5-year side of it, so when I normally invest into companies, I look for 100% return, and I look for 2 to 5 year investments. And yeah, I can see here that this actually is not too bad off my valuation. I think like in the next 2-3 years, it will be a $60 stock. And I think maybe even in the longer term, we'll be talking maybe about a $90 stock in this one. So yeah, quite funny that Simple Wall Street kind of matches up with what I'm kind of thinking. Revenue growth, you can see here, we did have the big jump from because of the CV situation. And also it is making profit now, which is really positive. And you can see the profit is going to grow at a good, huge amount here. And you see the revenue is still going to grow at like a 10% rate. So yeah, you're going to have a nice profitable company and revenue growing at a nice amount as well. So yeah, I think sometimes with this company, people think like this company is actually growing at like a faster rate, like a 20-30% revenue rate. But actually, when you look at it, 10% revenue rate, which probably might disappoint a few people. I think few people might actually think it grows faster rate. But yeah, you got to remember we have had a big surge here. So I think 10% rate is really good for a forward P of 17, and also on the earnings front as well. Nice earnings growth going on at the moment. Now, we are going to take just a quick look at the balance sheet, and this is probably one of the negatives. So when I do look into companies, I always like telling you some of the positives. I also be honest if there's some negatives here. You can see here the debt to equity used to be quite awful in this company, and if it wasn't for the CV, I probably wouldn't invest in this company because the balance sheet was just a bit too ugly. But you can see here it has started paying down some of its debt. Now it's profitable, which is very much needed, and I think that's what they'll focus on as well. So yeah, just from that point of view, the balance sheet is getting slightly better, which is positive. And you can see here is a little debt heavy, 321 million debt. The cash, which is 129 million. So the cash to debt is probably something that I don't normally invest in, but I am letting it go on this one slightly because it is profitable and paying down that debt. So just something to be aware of right there. Now, we are going to take a little bit of a look on the insider front, because when we look at the insider front, it's just really important. Basically this has been a recent, if we just flick across to here, you can see that this was actually a recent IPO here. I mean, if you did pick it up at $17, you've done really well. But basically, it has IPO'd, and eventually, the main reason IPOs do happen is so that insiders can sell the shares, basically. So, if an IPO happens and you do see insiders selling, don't take it too serious, because that's the whole reason why they've probably gone public, But when we do look, there has been a little bit of a thing here that I want to point out. So you can see that insiders are happening. The lockup period has also happened as well. So those are pre-IPO investors can sell as well. You can see there has been a few sellers selling. One of them being the founder, and also Eagle Tree Capital, which is really important to remember. Now this, you can see here, this is a massive chunk that they sold here, and also here as well. These are quite a lot of shares that they are selling. And you can see here, Eagle Tree actually have the biggest shareholding at 67%, and then the actual founder is the second biggest holder here at 3%, which is Andrew Paul. Now, something that is really important to know about, and I've just searched this right now, Corsair Eagle Tree, is in 2017, Eagle Tree actually bought a big stake in Corsair. So that's why they have such a big holding, is because back in 2017, they bought the massive stake into it. Now, what Eagle Tree tried to do is they actually wanted to either sell Corsair or IPO it. So that kind of says to me that Eagle Tree either want to offload a lot of shares. They basically want to get some money for their investment they made back in 2017. So that was either to like sell it and they make the money on it, or they go on IPO and then they can sell the shares. So one thing that you really do need to keep an eye on is that clearly that Andrew Paul wants to kind of cash in some shares, which we have seen, because that's why I sold it to Eagle Tree. And also that Eagle Tree itself are looking to offload some shares. And I mean, these were big amounts, you know, this was like 7% of the company. It is important to remember that Eagle Tree are looking to offload some shares as well, because that's why they took it IPO, and that's why they look to sell the company. They wanted to cash in a bit. So something to keep an eye on, because you might see over the next few months a few insiders start selling off this company. And that's why also if we just were to flick back to if we go back to the Corsair stock chart, this is why a few months ago I didn't really want to buy it, because the only negative, obviously the balance sheet, which is getting better, but the other negative is that insiders will start offloading shares. And this is on the last video, if you watched it, you would have seen that I pointed this out. And that's why I was like, it's at a rich valuation at the moment. I think when insiders start offloading shares, which we saw Eagle Tree did start dumping off quite a few shares, is you see just the valuation just drop off absolutely huge. And now that we have insiders dumping off some shares, that's caused a bit of a dip, the lockup period dip. And that's what I mean by, like, I was trying to just see if that would affect the share price, and it takes it to a lot better valuation, which I am seeing right now. So overall, when you look into the company, you can see that it is in a massive growing industry, a great brand with other products and other side incomes coming on as well. The products are great, highly reviewed products as well, and I think they will do very well as the industry continues to grow and Corsair continue to develop. And you've got a nice, 10% revenue growth company here, growing profitable at a very nice rate as well. The balance sheet is getting better, which was one of the ugly points that was with the company a few months ago. So overall, I think you can see, like, as long as this gaming industry grows, Corsair is going to grow with it and will do very well. Now, obviously, the one little red flag that I did have, which I said on the video 2 months ago, which is just watch the insiders, because it does look like Eagle Tree will look to offload a lot of shares, which they did do. They sold, like, in that one lump of sold shares, they sold like 7% of the holding. And that's why a few months ago I said I'm just going to wait on this one, and then bang, we do get a 25% dip on the company, which is then a nice, in my opinion now, is a nice buying opportunity to go into this company. So yeah, when I look into it, why I'm buying it, I think the valuation is a lot better. Now we've got a few insiders selling, but like I say, just keep an eye on that one, because it will be something that I think will carry on for maybe the next kind of 3-4 months. So I don't know if we will see the bottom in the stock until another 3 or 4 months. So just keep an eye on that one. But when I look into the company, I see a very solid company here with great products and a great growing industry as well. And I see this going up to $60 to $70 in the next few years. So that's why I'm buying the company. Like I said, hopefully the red flags as well just keep you aware, because I know that one thing that is very common on YouTube is the people talk about companies that they're buying, which I'm talking about buying, but I also, when I can and I see red flags, I'll tell you about it, because I think I've seen like this stock getting quite popular on YouTube right now, but you won't see maybe some of the negatives said about it. And that's definitely, the balance sheet and the insider selling are definitely two things just to keep an eye on. And yeah, that's generally why I like Turtle Beach a little bit more compared to this one. But yeah, I still think when you look at what the company's going to do over the next kind of few years with the gaming growth and the products they have, I think it will be really good for them. So yeah, that's why I'm buying Corsair stock. So I hope you enjoyed this little update into this company, and if you could, smash the like button if you found some information useful as well, and if you're new, subscribe maybe, and I hope you enjoyed the video, and I'll see you on the next one.